All right, we've got 2 minutes here until the unemployment report. We're going to load up Google. What time is it now? Here you see me refresh the button. It is 8:28 on Thursday, September 8th. And we're looking at unemployment claims at 8:30. Over here on the warp chart, we see a selling pressure signal from 8:06 until
order filled
8:57, and we have a high. We actually have two highs, declining highs, from here and here down. So we'll take a look and we'll see what the market offers us here in just a minute. And again, we're looking at selling pressure until 8:57. I'm going to put my stop right above this high.
Order submitted.
And just like we've done in the past, we'll go ahead and use a 1-to-1 minimum. There's a 2-to-1 approximately of our risk reward.
Order submitted.
And we'll just see what we get into here after the report. It's 8:30. Right now, 30 seconds after it, and we'll see what the net result is. They forecast 234,000 and only 222,000 people filed for unemployment according to our report right here. So it should be good news, and yet we continue to drop. So we're 2 points down, and I'm going to come into a break-even condition. Let's come up here, and I want to see if I can get $5 out of this move. That would be $250. So we're at let's just move this down so I can see. We're at 979.25. So 74.25 would be $5. We've got a tick locked in right here. We'll see if they follow through and come down. Not a tremendous amount of volatility here after this report. Markets have been kind of quiet last couple days. So we're 4 ticks up in the trade. We were up about 12, 13, 14 or so. Let's see if they can drive back down into the low. As a matter of fact, I'm going to come back up here and move my stop up above that high. I don't think the trade is really developed yet. Doesn't feel like the full force of the institutions have gotten back behind this move yet. It's very light, flickering movement here. All right, let's see if we can get down into the $4. Where's 3.5? There's 4. All right, so we'll come up to 74.25, and now we're gonna just lock in our tick and see if we can get a re-challenge of this low. There's $4. And again, we were predicting the movement. This is based on a published output for the software, and they were filled.
Order canceled
On a $250 move. And this is using software outputs that we provided 2 days ago, in fact. to the community of people who are following along with our forecasts. Here you can see we're continuing to drop down here. 8:34, 4 minutes after the report. So as I mentioned earlier today, we do provide forecasts for people to sort of follow along and see if what we're telling them is the truth. It's very easy with predictive tools to be transparent and honest and open about the methodology. And so here you'll see that 2 days ago we published the anticipated movements for the Emini S&P. Here I'm looking at a 3-minute chart. And can you guys see the 806 signal right here? 806, 857. And if we come and compare that to the chart on my screen, you'll notice there's the 806 signal, and there's the 857 signal. And so what's always interesting to me, just a little commentary here, the banks will put in a high and then they'll initiate a stop run. And you can sort of see the evidence of these stop runs right around the time the software is telling you to look for these institutional movements. So for 748, for example, you can see a pretty established swing low. They come down, they pull away, everyone's very excited. And then when it's time to buy, do you notice how they drop right down below that low, trip out more stops, people start to panic, and then it goes up. So right before this unemployment report here that we sort of all saw live, using times that we've been waiting 2 days for, published those forecasts on Tuesday, emailed them out to everyone Tuesday afternoon. We know what direction to look for the trades to go in, so we're not getting sucked into these false moves, these false breakouts. These are just liquidity plays. Banks are tricking people into buying, and they're able to sell into that at the high. So they're selling at the high and they're buying at these wholesale prices at the low. If you want to see these types of reviews and understand how the software works, we do have webinars once a week, every Thursday, where we review what was projected to happen versus what actually occurred. And you can see most of the time the moves that we're waiting for are producing the fruit of our labors. Predictive tools versus lagging, telling us what times and what directions in the future based on recurring historical movements in the past left behind by unscrupulous institutional trading firms. Yours for the taking. Just gotta put the tool to use, get some training, and go forward. Thanks again, everyone. Hope you have a great trading session today. If you have any questions, click on the link below to take our video demo or leave a comment below in the comments section. Thanks again.